Khazanah Research Institute believes banks should not be coming up with financing schemes to help buyers purchase homes at inflated prices. KRI Research Director Dr. Suraya Ismail says schemes such as rent-to-own programs can actually distort the market. This is on the premise that the homes offered via such programs were possibly not taken up because their initial prices are too high. Contrary to claims that banks are to blame for weaker home sales, KRI says access to house financing remains ample for eligible borrowers. Rather, the problem is that housing supply remains unresponsive to actual demand. According to a study by KRI, housing affordability has not improved significantly between 2002 and 2016. In fact, the country's overall housing affordability worsened drastically between 2012 and 2014. During the period, the median house price for Malaysia grew at a compound annual growth rate of 26.5%, while the median household income grew at only 11.17%. And while home prices have almost doubled since 2008, KRI pointed out that construction costs, labour, material and machinery and equipment have increased only slightly in the same period. It says this suggests either increasing profit margins, land prices or regulatory costs. Integrated poultry producer Leong Hup International, en route for a main market relisting on May 16th, wants to raise up to 275 million ringgit from its IPO to support its domestic and regional expansion. The group launched its prospectus today for the IPO exercise, which entails the issuance of up to 937.5 million shares, comprising an offer of up to 687.5 million existing shares and a public issue of 250 million new shares at 1 ringgit 10 cent apiece. 10 cornerstone investors have been identified, including the EPF, AIA, Foreign Hedge Funds Factorial Master Fund and Ovata Capital Management, agribusiness firm Louis Dreyfus Company Asia, in addition to prominent investors Tan Sri Chua Ma Yu as well as Tan Sri Kwek Len Chan, via Hong Leong Capital and Guo Line Singapore. Group CEO Tan Sri Francis Lau Tuang Wang expressed confidence in its prospects moving forward, as the group has been consistently delivering on average double-digit revenue growth over the past 5 years. Going forward, Leong Hup plans to further grow its presence in Malaysia, Vietnam and the Philippines. Leong Hup International is the new name of the restructured Leong Hup Holdings, a main board-listed company controlled by the Lau family that was delisted in 2012 following a privatization exercise. Petronas Dagangan is upping its k-pex to about 500 million ringgit for FY19 from some 300 million ringgit in FY18 to refurbish existing petrol stations and Mesra convenience stores. PetDec MD and CEO Datuk Sri Syed Zainal Abidin Syed Muhammad Tahir says the higher k-pex allocation will also finance the planned establishment of about 10 new petrol stations within the group's network. PetDec is currently leading the market in terms of the number of petrol stations with about 1,057 stations. Syed Zainal Abidin says the company already has substantial land bank and that now it is a matter of how to operationalize these land banks. Dutch Lady Milk Industries reported a 0.95% decline in first quarter net profit to 33.9 million ringgit on the back of lower revenue and higher advertising and promotional spend amid the impact of SST on local and imported services. Revenue fell to 265 million ringgit from 266.1 million ringgit. In a filing to Bursa, Dutch Lady Milk Industries said investment in strategic pricing to ensure affordability led to 6% volume growth in kilograms and 0.4% revenue decline versus the same quarter in 2018. Going forward, the company intends to continue focusing on growth and increasing the consumption of milk. But it warns that the market remains volatile and can be affected by various domestic and global uncertainties, foreign exchange rate, and any regulatory changes. It expects the global dairy price to increase in 2019. Despite the drop in earnings and revenue, the group declared a dividend of 50 cents per share. Bank Research says Bank Negara could potentially revise the overnight policy rates in July. Its chief economist and head of research, Dr. Anthony Das, says there is ample room for BNM to institute a cut, citing subdued inflationary pressure as well as key macro data suggesting evidence of a moderating Malaysian economy. Das is looking at a possible rate cut of 25 basis points from the current key interest rate of 3.25%. He played down the possibility of a rate cut at Bank Negara's next policy meeting in May, given the current domestic noises, i.e. the possibility of Malaysia's exclusion from the FTSE Russell and risk of a ratings downgrade by Moody's, which would lead to the weakening of the ringgit. Yesterday, the Department of Statistics said Malaysia's inflation rate returned to positive territory, with the Consumer Price Index rising 0.2% year-on-year last month from negative 0.4% in February. However, it missed market expectations of 0.3%.